Bitcoin exchange-traded funds saw a positive shift this week, attracting 2.73 billion in inflows, with analysts expecting even greater momentum as Bitcoin has managed to surpass 100K. That the 12 Bitcoin ETFs recorded positive inflows throughout the week, driven by optimism about a more crypto-friendly regulatory environment under President-elect Donald Trump, who recently appointed pro-crypto former federal regulator Paul Atkins as SEC chair, succeeding the anti-crypto Gary Gensler. The highest inflows of the week, totaling 766 million, were recorded on December 5th, alongside a 50 surge in daily ETF trading volume, as Bitcoin soared past the elusive 100K mark to a new all-time high of 103,679, a milestone widely celebrated by the crypto community. However, inflows into spot BTC ETF offerings dipped to 376.59 million on Friday, December 6th, as Bitcoin, the flagship crypto asset, dropped below 97,000, with the market experiencing liquidations exceeding $500 million in a single day. Weekly inflows reached 2.73 billion, marking the second-best week for these investment vehicles, trailing only the record-setting week of November 1822, which saw an all-time high of 3.38 billion. BlackRock's IBAT, dominating inflows for the sixth consecutive day, led the lot with 257.03 million on Friday, December 6th, while only 4 out of the 12 funds managed to attract capital per data from SoSo Value. Inflows into the remaining ETFs are as follows. Grayscale's GBTC was the sole outlier of the day, recording outflows of 32.3 million and extending its streak to 4 out of 5 days of the week, with a total of 303.5 million exiting the fund. The remaining 7 BTC ETFs saw zero flows. Despite a late-week dip in inflows, U.S. Bitcoin ETFs have surpassed Satoshi Nakamoto's holdings of 1.1 million tokens, amassing over 1.104 million tokens within a year of their launch. Experts predict that U.S. institutional interest in Bitcoin through ETFs and corporate treasuries will keep growing, driving the broader digital asset ecosystem toward global adoption. Hex Trust CEO Alessio Quiglini suggests this trend could ignite competition among nation-states to acquire Bitcoin. Similarly, Patrick Koziakov, co-founder and CEO of Mercurio, told Crypto.News that digital assets are evolving from speculative investments into transformative technology with widespread adoption. Weekly inflows into Bitcoin ETFs also helped push Bitcoin beyond the 100,000 mark last week, with experts projecting even greater heights for the leading cryptocurrency. In a recent note, Jeff Kendrick, the global head of digital assets research at Standard Chartered, predicted that Bitcoin could reach 200,000 by the end of 2025, that we would turn even more bullish if BTC saw more rapid uptake by U.S. retirement funds, global sovereign wealth funds, or a potential U.S. strategic reserve fund. He added, similar projections have been made by analysts at Bitwise, citing increasing institutional demand and dwindling Bitcoin supply, amplified by the popularity of Bitcoin ETFs as the key drivers. Despite the bullish projections, some industry experts have urged caution. Mike Novogratz, head of digital crypto bank Galaxy Digital, has warned of potential market corrections amid Bitcoin's surge. According to him, a lot of market participants are levered to the gills, and as such, volatility is expected. Chris Bernisk, a partner at Placeholder, recently echoed similar concerns, urging investors to keep their expectations in check, pointing to the 2021 bull market as a cautionary tale. Bitcoin's brief surge past 100,000 may not be sustainable in the short term, Bernisk explained, adding that inflated expectations in 2021 saw Bitcoin peak at 70,000 instead of the anticipated 100,000. At the time of writing, Bitcoin was just 0.4 away from reaching 100,000 once again. It was up 1.4 over the last 24 hours, trading at 99,580 at press time.